hike out of the big Bank of England, the largest since 1995 when Oasis and Blur were competing to be the number one band. Britpop was just kicking off in the UK. 27 years ago, basis last time the Bank of England had to act like this. The results, let me get rid of me a minute. The result is we've got a sterling that is under pressure. The Bank of England statement also cut growth forecasts. They're talking about inflation as a measure in CPI, remember, that's a very contained measure, topping at 13.3%. 13.3% for UK CPI inflation in October this year. Obviously, could go higher. The governor, Andrew Bailey, he's still talking on their press conference, but sterling very much in focus today. This is a 15-minute chart for cable. We initially spiked over 122 against the dollar, simply on expectation. There were some caveats. We might only go to 25 basis points. The committee, the MPC, voted 8-1 for 50 basis points. One member did vote for 25 basis points, but the overwhelming majority, 8-1 for 50 basis points, a record move for 27 years. It's the sixth consecutive, this is another key thing, it's the sixth consecutive rate hike from the Bank of England. So tentative 25 basis points up until now. They've sort of bit the bullet a wee bit, as many analysts are saying, and sterling has come under pressure because of that. If I just bring in the FTSE, which I did have down here, I've got new white charts today. So your comments, guys, about the black background has been taken on board, and we've changed them to white for now. But it's where's my FTSE chart? That's the USA, not the UK one. I thought I had the UK one here. Never mind. Let's concentrate with the forex markets. Anyway, so sterling down under one from big whole point from 122 under 121, and we trade at 120.70. So on the daily time frame, we ran to this key resistance here at 122.60, which we couldn't get over. It was a little cluster here from the end of June was the resistance, and that's where we've run to here at the beginning of July, and we're coming down. So we're into our third day down. And we're under 121. Anthony's saying, what does this mean for the euro? Well, obviously different economies, but the Bank of the Fed acting very aggressively, Bank of England acting recordly aggressively, if that's a correct sentence. But as far as the euro is concerned, you could argue that puts increased pressure on euro and Ms. Lagarde to act a bit more aggressively as well. So we've got a similar, if I zoom this up, this is the 1 hour chart for the euro. Let me zoom it up. So today we've ran into this 101.97. So 102 again, we just can't get over and hold. Let me just put 102. These are new charts, so just bear with me. So there's 102.03. So 102 is where we've been running. It's really been pivoting through 102 euro for the last few days. And we can't get to that, but we have support at 101, which is all the way down there. Let me just put that on there as well, just to show you that 101. It's quite a long way down. Come along. It doesn't want to go down there. 101. It's just off the chart there. This is for the higher time. So 101. Where's it gone? Trying to do things. So euro really a bit range bound. If we go to the daily time frame, we see where we can't break away from the 102 area. We can't break over 103. I'll do that much more quickly than I did the 102. There we are. 103 is up there. We can't break over 103. So we've got quite a range. It's about a 200 pip range here. But we don't want to go under 101. We don't go anywhere near parity again. So euro a bit range bound. That's to do with weakness in the dollar, weakness in the euro, so they're sort of cancelling each other out, but sideways action for the euro. We'll look at that in a bit more detail, if you like. That's the daily. Let's go down to 4 hours. So let's go back to the daily. So you can see the daily is still biased to the downside. We just popped into the upper half of the Bollinger Band, but currently, let's zoom this up, on the daily time frame, we're supported just under 102 here at 101.50, where the bottom of the Bollinger Band is. So this is not the bottom of the Bollinger Band, the middle line of the Bollinger Band. So the 20 day moving average sits here at 101.50. So that's current support. But it's here on the daily chart, you can see 101 is the big support. So we're still sort of biased to the downside, I would argue, even though we've been in the upper half of the Bollinger Band. We've just been up for 3 or 4 days, 4 or 5 days, just to say. But as you can see here, the Bollinger Bands are compressing and going sideways. So we're consolidating, as I said earlier, around the 102 area. But the bias, as you can see on this chart, is to the downside. And that still remains, even though signal line here on the MACD is starting to rise. The histogram columns were getting shorter. They're starting to flatten out as we flatten out. We lose direction. So this could easily dip down to the other side. Stochastics here have already rolled over. These are very fast moving ones. It's 533 here on this set for the stochastic. So it's rolled over quite aggressively here from that high earlier in the week. So you might have caught that short there on the euros. We went to 102 on Tuesday, and we've come back weekday Tuesday. Balanced day yesterday, and we sort of bounced a wee bit today off the 20-day moving average. But intraday, the 4-hour might be a bit perkier. There we go. It's ran to the top of the channel. It's come back down. It's in the under half of the Bollinger Band on the 4-hour, and the 1-hour has been in the under half. I should put the my sentiment. Periods of excuse me. So we were sort of in the under half of the Bollinger Band earlier this morning and all of yesterday afternoon, and we've risen up at the moment, ran into the 200-hour moving average here, which is providing nice resistance this morning, and then we bounced off that, so a nice short there. But at the moment, interestingly, that 50-hour moving average is providing support, but that's coming to join the 20-hour, so big support here, but still sort of pressure to the downside on that. Movement. Mohammed, gold is going up 1950. Well, it broke the 1950. I'm not quite sure what you mean there, Mohammed. Gold broke 1950 a long time ago. Where's my gold chart? Oh, there it is. This is gold on the 1 hour, so you can see it's let me go back to the daily. See, so it had quite a strong reaction from these lows. There's no lines on here. From this low down here at 1680 at the beginning. Towards the end of July. Let me just period separators. There we go. Towards the end of July, we rallied into the end of July to top half of the Bollinger again through 1750 here. So there we are, 1750 there. It's about there. 1750 there. So I guess you can say it's going back to 1750. It may indeed. It's because it's ran. Looked like it's had the trend line remains to the upside here from this bottom of that low in July. We're still holding that, but we're testing it. We tested it yesterday. We tested it this morning. We bounced off that at the moment. We're at 1785 at the moment, Mohammed. But the resistance you can see with that blue line that's the 50-day moving average. So we've got significant resistance there, just shy of 1800 at 1890. So the 50-day sits at 1890. The top of the Bollinger Band, there we are, sits there at 1790, I should say. The top of the Bollinger Band is where we are now at 1780. And then our trend line, our daily trend line is down here today around about 1765, 1762. So it's getting compressed. So it's either going to break through this or this trend line remains as support as it has so far from the end of July, but we need to break 1790, and then that brings in clearly 1800. If indeed, Mohammed, you're right, and we're going to move back down to test this 1750 zone. 1750 zone, which is here. That would sort of drag in. We'd break the close on the daily below this at this 1750 would break this trend line, and it would bring in the 20-day moving averages. This is turning up. You see how it's the Bollinger Bands have compressed here at the beginning of August. So the top's come in as it's been coming down, and the bottom has come up. So we've got this squeeze. Whoops, didn't mean to do that. We've got a squeeze on the. Let me do that. We've got a squeeze on the Bollinger Bands there. So there's some activity happening. So are we going to break above the 50-day moving average, or are we going to break this daily trend line? That's the decision daily traders are making. But at the moment, it's a good day. We're up at 1784. We started at 1762 today. As far as intraday is concerned, Mohammed, I don't know if you're talking about, it's been a strong day, as we've just seen. There's that daily trend line. We broke into the upper half of the Bollinger Band early this morning here at 4 o'clock. We broke a break in the 20-hour moving average. We broke the 50-hour moving average a couple of hours later at 5 o'clock, and we've rallied. Obviously, the situation in Taiwan is obviously adding to the bid on gold currently. This issue, the tension between China and the US, so that will perhaps continue. The exercises are supposed to go on for 4 days. We've got the Chinese Army, Air Force, and the Navy in 6 areas surrounding Taiwan. There was rattling rumours overnight, which is what we've had this rally in the gold market from, that the Chinese were actually going to fire live missiles over Taiwan itself into their different areas they've got covering surrounding Taiwan at the moment. But that still remains very much in place. So today, 1784 to the upside. That's trending high in the 4-hour chart, breaking highs. I thought interesting, it's 1785. That's that resistance there from yesterday. Was that yesterday or early in the week? That was the second. So that was the day before yesterday. So 1785. We're trying to push, or we have in fact pushed for a new weekly high at 1788. So gold remains bid. Whether we turn back to 1750 is a moot point, like we said on the daily chapter. I don't know what your time frame is, Mohammed, but certainly it's bid at the moment. 1784 is where gold trades currently. Odd seller. This is gold. Sorry, this is. Have a look in the top corner here. I don't know if we can. We can't really make that any bigger. But if I actually, what if I? No, that doesn't help. Does that help you? What if I put that on there? It's just the number, isn't it? You can't really see. It's the asset. This is gold. I'll tell you. I always announce what I'm talking about when we start the chart. So come to you as well, my friend. Andy, no problem. Hello. Euro says, Terry, unless that's somebody answering. Euro, really not a lot going on with the euro. Today we've this is the euro on the 1 hour again. See, we've ran into the 200 hour this morning. That provided a nice shorting opportunities. Big thick wall of 200 hour. So for 1, 2, 3, 4 hours we couldn't break over it. We were testing. We had a big run into it, consolidated for 2 hours. There were a big rejection right down to the 50-hour moving average. Now we've bounced off that. So we're sort of contained at the moment between these key 2 moving averages at the moment. The 200-hour up there at 101.95 and the 50-hour moving average there at 101.75. Should this break, this 50-hour, we then got the 20-hour, which sits at 101.69, 101.7. So that's compressing, but perhaps biasing to the upside, euro, pound at the moment. Can you also analyse dollar yen for us, please, once you have done with this one? Certainly, dollar yen. So it wasn't that long ago we were looking at dollar yen approaching 140. It didn't happen, and we've turned around quite aggressively. This is a new chart, so excuse me. We got to 139.40 up here. Again, I put the period spread. I always like having the period separators on, so I see where I am. It gives me some sort of judgment. So this was our chart for July. It was rallying. Chart for June was rallying. We went to 139.40. It's a bit high. That says 139.30 or 139.40 is where we went to. But we've rolled over. Here on the daily chart, we went back into the bottom half of the Bollinger Band. Here on the change that colour as well. And when you do new charts, let's make it a colour we can see, which makes it, let's make it dark blue. There we go. So here on the 22nd of July, we rolled over into the bottom half of the Bollinger Band under the 20-day moving average, and we started to move down. As you can see, what's happening now, though, we have this expansion of the Bollinger Band as we moved down. We went under the 50-day moving average. We went down to 130.50 intraday. On Tuesday, 130.25, in fact 130.40, I think it was. Anyway, we were under 131 and 133, which is some targets from the end of July we were looking for. So now, currently, we have resistance. What was support, the 50-day, which only lasted 1 day, didn't it, is now our resistance. So to the upside, Dollar yen has resistance at the 50-day moving average at 134.64. The 20-day moving average, which is at 136.20, and then this, well, not all-time high, but 24-year high there at 139. So there are upside targets if this is going to take off from here. That is a key resistance, that 134.60, the 50-day moving average, which you can see. If I zoom this out or zoom this in? I never get it right. There we go. If I zoom it out, you can see the last time we were under the 50-day moving average for any length of time was all the way back here at the beginning of the year in January. So this is a very, very significant rally we've had for dollar yen, a big weakening of the yen, a strengthening of the dollar. Japan is a massive exporting country. Just think of all the things you buy from Japan: cars, electronics, electrical goods, and all sorts of other stuff. And so a weak yen has helped that. But it's got too weak, many are saying. But at the moment, it's all to do with the divergence in policy from the central banks. The Bank of Japan are still talking about stimulating their economy and not increasing interest rates, or negative interest rates in Japan, whereas the US Federal Bank, increasing interest rates quite aggressively. And therefore, we've had this big divergence. The pair could only really go in one direction. News breaking of more dovish members joining the Bank of Japan and ultimate pressure that the Bank of Japan will have to intervene has perhaps caused this cooling to this 130 level for dollar yen. But yen is back, dollar is perhaps back in the driver's seat now because inflation isn't going away. It's broader and deeper than many of the central banks are expecting, and this is cooled on expectation that the Fed will start. It won't be a 75 basis point hike in September, but a 50 basis point and even 25 basis point in December. That rhetoric is now being challenged with the data. But having said that, the US data is actually holding up quite well. It's softening. So we see, the softening seems to have stopped. If we're looking at the PMI data this week, for instance, the manufacturing and services PMI data was much better. The inventory goods was high, but that's not necessarily a positive sign. I mean, people aren't buying them, so factories are full. So that's adding to the negative story. But so far, jobs have held up. Jobs this week were a bit weaker, but it's still just shy of 11 million. But it was a miss. It was below expectations. So non-farm payroll, as ever, always interesting, always key. Tomorrow, the spread is quite wide. We're expecting about 260,000 new jobs in the headline number tomorrow. But the spread, again, from the analysts, anything I saw as low as 60,000. And I think the highest I saw yesterday was 400,000. I can't remember 400. It wasn't much above the consensus. It was the expectation to the low side was the one that surprised me. So John Andrew tomorrow for the non-farm payroll data. To say today's Bank of England day, but dollar yen, we have resistance at 134.60 and support sits at that Bollinger Band 131.92 today. We're under our 50-hour moving average at the moment, so we're sinking again today. We've gone down, having rejected that 200-hour. So dollar yen moving to the downside, haven't breached that, but that's currently, that candle is still in completion. It's still got 20 minutes to form, so we can't make a decision on that. But next low would be this clustered back here from yesterday, which takes you to 132.60. Okay. Nardi, I sell last in euro, hit my stop loss. So you've been stopped out. Well, that's good. That's not good, but it's good that you're trading with a stop loss, Yardi. It keeps your losses manageable. But really, it's not really trending. It's sort of running between, as I said earlier today, it's running between that 200-hour really and the 50-hour so far, but really the 20-hour moving average. So the middle of the Bollinger Band. And really the top of the Bollinger Band, there you go, it's contained with that 200 hours. So that's our range for today. Somebody's saying they can't see me. Okay. Can everybody else see me? I'm supposed to be here. Look, I'm down here in the bottom corner, Daniel. Hope you can see me. USD, now a sell. It's already a sell, he's saying. Owen's asking about the guppy, pound, yen. Have I got it down here? Should have it down here. I think I saw it earlier. Let's have a look. Tell you what, let's bring it here. Where's the pound gone? So I'm going to change the template to the white template. I'm assuming everybody prefers the white background to the black background. As people are requesting me change it, so let's put the white background on. So the guppy here really started to consolidate as we ran into July and August. Let me see there. From these highs, let me just put that period change on. I don't want to volume, I want periods. Correct. So we are. So we've sort of been declining through from our June and April highs here over close to 170, 168 up here. In fact, we got to 169, didn't we? I think, yeah. So the highs have been getting low. The lows have also been getting low. So we got a low here, low here, low here on an end of day basis. So and we've sort of still moving down from there. So that's where we're going at the moment. Excuse me, the guppy. This is a recovery of the. Oh, hello. It's a recovery of the yen, which we've seen very, very weak. We saw on that dollar yen chart. So sterling remains pressured. Obviously, it's sterling's come under pressure today because of the announcement from the Bank of England. So this is continuing to decline. So where do we go from here? Well, we're at a key support level already, which we plotted on Tuesday, which took us to 161. So 161 is the next line in the sand, which is just a bit low here. 161, there we are. For dollar yen, but that's imminent. We're right on top of that at the moment, aren't we? So if we zoom this up, you can see we're moving towards that. So below that, look to the left. Where do we go? Well, next support here. Our low for May took us all the way back here to 156.54. So 156.50 in round number terms for the guppy from May. Our intraday, the spikes now come into play here for June, and interestingly, we've already breached that here intraday in August. So biased certainly to the downside. There's a big sell-off towards the end of July. So if the guppy is going to move back up, it needs to break above 163.70 on an end of day basis. And then there's the 50-day moving average just above that at 164. So the 20-day moving average, the middle of the Bollinger Band, sits at 163.70. Next resistance is 164, where the 50-day moving average is. And then the high for July, is that the high for July? Yeah, it sits around about the top of the Bollinger Band there at 166. So they're the upside targets. So downside target support comes in right now at 161. We're currently trading at 161.46, so 161. Then we've got this spike, which, well, actually, it's probably this one now, 115. So 159, so 160, which is the spike low here in June, and then our August low now comes in. So some key levels now. Our August low now comes in at 159.40, and then the very important 200-day moving average, this red line here, at 158.40. So there are support level areas, and these are our resistant areas to the upside. So bias to the downside, we're in the under half of the Bollinger Band. The 20-day moving average is sliding down. The 50 looks like it's going to roll over if we continue this decline. And that was a very pressured sterling announcement from the Bank of England. Very dour outlook, inflation going up, growth going down, a new Prime Minister coming in promising to, it's likely to be Liz Truss, maybe change with this announcement from the Bank of England. But from a fiscal point of view, she was promising big tax cuts, which cost money. So it's more pressure on sterling and more pressure on the Bank of England, more political pressure really, if gilts are going to come under pressure, because the Bank of England are talking about selling their bonds, or their gilts as they're called in the UK, to facilitate that, so it makes borrowing more expensive. She's talking about borrowing to cut tax cuts, so who knows, it's lots of pressure. So Rishi Sunak may come back into the frame, but at the moment Liz Liz Sunak. Liz Truss is very much ahead, so that's pressure to the downside. Unknown saying sell dollar yen. Well, we talked about that before. It's down, and Murtari's saying about gold. Well, gold. Where's gold? Gold's here. It's still relatively big today, 70.80. It was to 70.85. It's supported that down line. We looked at that before, didn't we? The 1 hour chart's had a strong all day. It's topped out though as we've gone up. So we've got an intraday high of 17.88, and it's given up some of its gains. But it's it's been a strong rise. We are out of the Bollinger Band, so it's suggesting it may roll over. That the stochastic is in the overbought area quite significantly. It's crossed here. The KD line have crossed, but we're still in the overbought zone. So we've still got some energy there, but may have made some profit there, Fanny, on that top out there at 17.88. Let me just zoom that into the daily. Where does that fit? Yeah, you see, so it's higher than Tuesday, so 17.90 is the key, where that 50-day moving average is. So it turned lower. I'll go back to the 1 hour. So it turned lower before we got to the 17.90. Yeah, there's that 17.90 level, which is the 50-day moving average. So we didn't quite get there on Tuesday, and we haven't quite got there today at the moment, but it's still bid. Here you saw this rolled over quite aggressively on Tuesday ahead of Pelosi's visit. We're still bid now as the war games, or the exercises, the Chinese call it, play out. Three blesses. Could you please touch a little on the Aussie yen? Need some clearer idea over here, over there. Sorry, certainly, my friend. Let's get rid of that. I didn't mean to do that. Where are we? Yeah, still here. Three blesses. I don't know what time frame, but we'll start with the daily. Let me know the particular time frame that you're trading. But we'll start up at the daily time frame. Aussie yen, just as a heads up for everybody. I've disappeared there because your question's so long. The Aussie yen, three blesses, is the most sensitive of all the currency pairs. So it's coming under a lot of pressure because of the geopolitical tensions between the US and China. It's the yen's being bid, the Aussie's being pressured, so the pair has ultimately come down over the last few days. Where's my Aussie yen chart? Here we are. So as you can see, it's just proving me wrong. Just put the properties in it, so I can see my period separate. There we are. So the worry over Miss Pelosi's visit here on Tuesday, we went all the way down here to 90.50, but it'd been trending low for a while ahead of this anticipated move. Obviously, the global recession issues have been a problem as well. It overreacted, well oversold here, down here. RSI was down at 8 under 20 at 90, so we overreacted. It trended low, and it's broken here. I don't know how you're trading this, but there on the 1 hour chart, back into the top half of the Bollinger Band, and it's rallied into the 50 hour, couldn't hold it, dipped down, but then when it did break above, it broke. Interestingly, so you're buying at the 50. This candle here for zoom in, see, bigger than the initial break, closing higher than that initial break, closing shy of the initial break here, but we followed through quite nicely, and we've been in the upper half of the Bollinger Band since late on Tuesday and rallying higher. So we've gone from a low at 90.50 here on Tuesday. We've rallied to, couldn't get to 94. We got to 95.75 today and turned around quite aggressively. So there's our high here at 93.80, in fact. And, the worry has taken the Aussie yen down as well. And it's now breached back into the under half of the upper Bollinger Band. So we've got a nice run from down here at 91.50. Even to 93.50, or the next target was obviously the 200-hour moving average from a break of the 50-hour moving average. When you're trending like that, just staying in, and that's enough. Not lots of profit taking going on here. Couldn't get to 94, and we've sold off. That's clearly what that is going on there. So three messages. I don't. Oh God, you can't see this. Sorry, you can only see me. Sorry. Sorry. So hope you remember what I just said. So that's what I've just been talking about. The breach of the 20 moving average here up from the low of 90.50 on Tuesday into the upper half of the Bollinger Band, ran to the 50-hour. Initial break was retraced, but we didn't go lower than our lows here, which is always interesting. Nice big break candle here, back up here by 8 o'clock on yesterday morning, the 3rd. Didn't break above that high till a few candles later, but then we broke out of the Bollinger Band. People might have sold at that breach of the Bollinger Band, who knows, but it's been trending really nicely. So up we go through 93, through 93.50, into the 200-hour moving average. Trend is your friend, day and a half. Thanks very much. And profit taking here on the breach of the 200-hour and turned around quite aggressively with this big down candle. So that's certainly a profit taken there, taking out the last 4 or 5 hours of activity to the upside on an intraday basis. But on a higher time frame, the 4-hour again has run to its 200-hour and 50-hour, 50 period and 200 period moving average. So again, big resistance there. It's bounced off that currently, but again, it's still big. It's still way above its 20 period moving average down here at 92.30. So the 4-hour traders had a nice run. The 1-hour traders certainly had a nice run. And the daily trade is interesting. It's still sort of consolidating, but we're still negative on a daily basis because the daily 20-day moving average sits at 93.72. Which remember, we've got to today and rejected so far. And the 50-day moving average is below that at 93.67. So that they're both really going sideways. To be honest, they're not that directional. So we've had a big rally up, shake out. So on a daily basis, you've got support at 91.60 and resistance, which we've ran to today already, 93.60, and then above that 93.80, which we've run to on here as well. So again, I don't know what time frame you're trading this through, blesses, but there's your daily support line and there's your daily resistance. So resistance at 95.50, support down the bottom here at 92.20. So there's your daily range. So trade that range until it breaks it out, basically buying at the bottom, selling at the top and perhaps acquiring at the bottom. Depends how you're trading that. Richard, Euro. It's not doing much, my friend. Again, I don't know what time frame you're trading. It's all about sterling today, ladies and gentlemen. But Euro is continuing to find resistance here at this 200. This is the daily. It's the 1-hour time frame today, guys. There's the 200-hour moving average. It's right on line with the top of the Bollinger Band at 101.95. It's ran into it, rejected it, and now it's having another go with a big candle this time, a bigger candle than the previous 4 or 5. It's an engulfing positive candle currently, but it isn't finished. It's got 5 minutes to go, so this is looking relatively positive at the moment. Next resistance is just above there, so 101.95 is where the 100-hour, 200-hour moving average sits. The next resistance sits there at the big round number of 102, which we are literally pivoting through on a daily basis. So there's not much upside here today potentially. And there's not a great deal of data left today to move that. We've got, I haven't said that, we've had unemployment claims, haven't we? That might have moved things. Yeah, unemployment claims a bit better than expected. Trade balance, worse than expected. No, not as bad as expected. Building permits also showing signs of coming. So that's positive. Trade balance is relatively positive, and unemployment claims back to 260. So it's back to where we were, around about where we were last week, but up off the 255. So that's a bit of a mixed bag, but biased to the upside, to be honest. But Euro has taken that in its stride, so it's ramming into this at the moment. So if you're trading it on a shorter time frame, it's again relatively positive since I've been chatting on basically last half an hour or so. Euro's turned positive on the data, but again, there we go. That resistance is where we're running into at the moment. So whether we'll go higher than that, who knows? But there's a big resistance there. The 200-hour moving average is resistance, and the 50-hour moving average is support at 101.70. What's that? 101.75, and then the 20-hour at 101.70 to the downside for the euro. Cole's saying, can we sell gold? I can't tell you what to do, Cole, my friend, Austin. But gold has had a good day so far. Where's my gold chart gone? Keep losing it. Gold's had a good day so far. It's currently down this 1 hour candle, but that's still relatively big to me. As I said earlier, we've ran up. This is your daily trend line, the yellow support line. So that's our support. Resistance sits where we've been to today, Austin. There's that 50-day moving average, which sits at 1790. And if we go back to our 1 hour time frame, you can see we've topped out before that moment, 1788. We topped out here in this hour at 1788. So a similar high we got to on Tuesday before we retraced quite aggressively. So 1788 has proved another resistance. 1790, just $2 higher, is a key daily end of day resistance, and was currently moving down. So there's certainly some profit taking going on in this move. But at the moment, that still looks relatively well bid. We've got support on the daily basis at the yellow line. We've got the 20-hour moving average crossing above the flatlining 50 moving average, which is again positive because of this strong move we've had today. And the Bollinger Bands, as you can see, are starting to widen because of this quite volatile move. But we need to break over where we are today. So we need to break the 1785 area, see where the candles have closed, or the last hour candle closed, just a wee bit above Tuesday's top here on an end of hour basis, which was 1785, just above it. This was 1785 is that key resistance. 1788, the intra-day highs. And then 1790. So they're the areas to the upside. So we've rolled over. The hour's completely rolled over now, and we've moved down as we start this new hour. So where will this move down? Well, it moved up quite nicely. It could move down quite as quickly like it did here on Tuesday. So support now 1771, where the 220 hour is, and the 50 hour sits at 1768. And then as our daily trend line currently sits just around that level as well at 1768. So that's our support area. We may run into that as we move into the end of the day to the downside. Unknown. Close it, not click on it. Unknown has a little advice, a Bitcoin, a dollar. Well, again, Bitcoin has sort of been. Have I got Bitcoin here? I think I did, yeah. Let me zoom this in. I'm sure all you Bitcoin holders are well aware of the downtrend we've been in and some possible life coming back to the Bitcoin market. We found key support around about 20,000, didn't we? Excuse me, it's a new chart. Let's just put the low in. So the low we had here in June took us under 19,000, under 18,000, something like 17,000, something was it? 18,500 was our low here. Let's zoom this up a bit. There we are. So we've really been moving. Sorry, I don't mean to do that. Let's do that and let's zoom in. So we've been, as I'm sure you're all aware, we've been legging lower, haven't we, for all of 2022. Let's insert the periods. There we are. So we've been moving lower all of 2022. So 18,500 really was our low here towards the end of June. It was also a low that we got to in July, and we sort of ramped off that, haven't we? So if we zoom in now, and I move that up, there we are. So we've moved off this 18,500 level. We've broken through the key 20,000 level. 20,000 a bit down there. There we are, 20,000. And we sort of been ticking up for most of July. It wasn't anything it wasn't anything significant, but there were some fairly hefty candles, and we got to 24,000 and then rejected. Where was it? We rejected. Well, look at that. It was a key technical area. It was a 50-day moving average as it crossed the top of the Bollinger Band here towards the end of July here on the 28th, and then we've been down since. But interestingly, if I zoom this, how can I get this a bit bigger? If I zoom, there we are. So there's our 50-day moving average, which has obviously provided resistance to the upside the last 6 days or so, hasn't it? So that needs to break. We need to get over that if we're going to move up. Now we've had a couple of strong days here and here and here. But support now sits significantly, 10% if you like, above that key 20,000 level. So 22,000 is where now the 20-day moving average sits. And as you can see here, I hope you can see, we squeezed in here after this big leg down. We squeezed in, found some support down here towards the end of June. We've sort of elbowed a bit higher, sort of ratcheted a wee bit higher, waved higher in July, ran into the 50-day moving average, and then ticked off it for August. But this is looking relatively bullish for me because we've been over the midpoint of the Bollinger Band here since the middle of July. We've sort of waved up and waved back down. The 20 period has provided support, 3, 4, 5 days down, but then we bounced off that. That was then another $1,000 above the key 20,000 level where we'd been sort of rolling through unknown. Good to have you in. Give you a name. Is that Harry Potter? I think it's a Harry Potter picture, isn't it? Yeah. So that was another $1,000 above the 20,000 level. Remember, 20,000's here, and then we rolled over to 22,000. So 22,000 is now our key support as we go into August. The full love of August is coming, and it's also sitting at the 20-day moving average as well. So Bitcoin, if it's going to break out, it hasn't broken out in the summer so far, has it? It's been a gentle sort of wave. So, but resistance now, technical resistance sits at 23,400. Support sits at 22,000. That's the two, it's only a $1,500 range now. That's the level we're looking to break out, or you'd be looking to break out if you're looking to go long. If you're looking to go short, you'd like to break under 20,000, 22,000, under 20,000, and then test this low here, which was cemented in June and July. So will August also print this sub 20,000 level around about the 18,600 level to the downside. So I don't know whether you're long or you're short, unknown person, but that's my analysis of Bitcoin as it stands. On an intraday basis, it should really be biased to the upside. The 4-hour chart has rallied here. There's that 24,000 breach, 24,000 here. At the end of July, and it's been slipping lower. But again, it's got big fat support at the 50 period moving average for 4-hour traders, and that's been sideways action for most of August. So the 4-hour support sits there at 22,600, and it's really range bound. It needs to break 23,400. So 23,400 is the top of the range. 22,600 is the bottom of the range for your 4-hour traders. Thus far, or currently this week, we're negative into the bottom half of that range, being under the 20 period moving average. The Bollinger Bands are angling down as well, although they're narrowing. So again, that support needs to hold. To go long, we need to break over the 20 period moving average there at 23,000 for 4-hour traders. As far as intraday is concerned, today it's got a bit weaker. Basically, moving down, significant sell-off this morning into that low from yesterday as well. Low from Tuesday was there at 22,675. Low from yesterday was around that. There's the 200 hour, so that's we've been to test that. So that's your big support. 22,645 is the support for Bitcoin today, and resistance now sits at $23,008, so call it 23,000, where the 20 hour moving average, the middle of the Bollinger Band, and the 50-hour moving average sits about $30 above that. So that's your range, the blue line to the red line, basically, for Bitcoin for the rest of the day. Sunday, I can't tell you what to do, my friend. You're saying, should I buy or should I sell? Should I stay or should I go, as the greatest band in the world sang a long time ago. Euro, well, it's not. Sunday and everybody, what's your system telling you to do? What's your strategy telling you to do? Don't trust, people like me on the internet saying this is what's happening. Understand what's happening. My interpretation of what I can see on the euro is that we have big resistance today at 101.94. Why do I say that? Because the 200-hour sits there. That's the red line. And it's a big round number just above that, just 10 pips above that, sits 102.000. And we haven't been able to break over the 101.930 basically. Look at this intra tried, and we failed again. So last time we were back here, this candle hadn't completed. It's completed to the upside. But it's a positive candle, but it's engulfed by the negative candle of the 1400 hours to 1500 hours candle. So it's negative. It's biased to the downside really now. So that really needs to break to the upside. It's biased to the downside, but how much further can it go? Well, big support today is that blue line there, which is the 101.75. So currently we have on the 1 hour time frame, Sunday, and anybody else who cares to be interested in this. My analysis from this chart setup is support sits there at 101.73 and resistance sits there at the red line at 101.93. So you've got 20 pips to play with. If we break out of this convincingly on an end of candle basis, we go higher. If we break below this on an end of candle basis on this time frame, we go lower. That's on an hourly basis. If you're trading this on a 15-minute basis, that's obviously different. But those resistance areas are still key because there's that 102, the blue line from the other. So it's above where we've been today. So 109 sits there. We've been into that period. Here on a 50 or a 15-minute trader, you've been shorted it into there. It's found support at the bottom of the Bollinger Band. It's come back over the 50 and the 200. This is a potential positive move on the 15-minute. If the 50 period crosses over the 200 period, that's a positive move. But again, I don't know what time frame you're trading it. But as far as my default 1 hour time frame is, not a lot's happening on euro, to be honest, Sunday, and it's not trending either way. So wait for a break of those if you're in the end of an hour trade. If, on the other hand, you're looking at a 5-minute system or a 1-minute system, what's a 1-minute trader saying? Well, we've been long on this nice rally here for a while, and it went short here quite significantly into the under half of the Bollinger Band. Big candle, taking out all of that previous action, so it went short here for 1-minute traders. The signal line was starting to move down. Short the end of that. It's ran to the bottom of the 200 hour, so that would have been, the pips I would have taken out of that from 101.1877 to the 200 hour there, or the 200 minute, I should say, 101.18. So it's still relatively negative here on this minute chart. Obviously, things are changing literally as I'm speaking. But again, support for 1-minute traders, scalpers is at 101.85. Resistance, you'd look to perhaps go long again on a break of 101.88.4. But you need to say you'd want to see a nice big candle. Size matters with candles. I say it all the time. And where the last two big candles? Well, it was a big negative one here at 15.59, just as the hour came up. No surprise there. And the last biggest candle was here at 16.08, 9 minutes later, and that was also negative. But it ran to the 200 minute and then it bounced off it. So if I'm trading that on this particular setup, I'd have been short there and got out here as it hit the 200 minute. Not greedy. And waiting for a break over this now. If he's going to go long, if not, he needs to break the 50 hour and then see if he can have another go at the 50 minute and the 200 minute. But MACD is looking negative. The signal line's down. Stochastics have bounced up out of being oversold here, so they're moving up. So conflicting information. So wait, patience. There we go. It's breaking this now at the moment. Will it hold it? How big of a break will it be? No, that's the sort of thing to take into account when you're trading, friends. But Sunday, I can't tell you what to do. Have a system, trade your system, accept your losing trades, and bag your winning trades. Keep your losing trades small. You will have an awful lot of them. Nobody appreciates how many losing trades you have. You don't think about that sort of thing, but just keep the losses small. And honestly, yeah, it sounds a bit twee, but the winning trades will take care of themselves if you have a system you've back tested, you've trusted, and it's working for you. So there we go. There's a classic. There we go. It tried to break the 20-hour here, 20-minute, didn't it? It doesn't want to, does it? It's just wanting to move down. So. Please, why is my spread really much trading? Confi's on Facebook saying, why is my spread so large? Confi, the spread, my friend, is what is, it's what the market is dictating. It's not so, sometimes it might be wider than other brokers, other times it might be much tighter than other brokers. We are very, very competitive when it comes to our spreads. We're here to help, basically. And as with anything you buy in life, it's the whole package you get. From the people you're buying things from, whether you're buying a car or you're buying brokerage services from HFM. Think about the whole package. We're as good as anybody else, I would argue. I wouldn't still be here working, and B, I really truly believe that. So yeah, it's spread Confi is part of the business, part of the costs of trading. Okay. There may be some other brokers with tighter spreads, but they only maybe for now. How long have they been in business? How long have they been trading? What are their spreads like on other assets? If it's the asset that I don't know what you trade, Confi, but certainly it's the cost of trading, I'm afraid. And you need to know that, it's your money, look after it. It's all about risk management, Confi, my friend, when it comes to trading. But we're here to help. If you're new, watch our videos, watch our webinars, read our ebooks, and stick around. Ask me questions about particular assets, my friend. But hopefully, we'll meet one day as well. I don't know where you are in the world, but anyway, there you go. That euro continues to move down Sunday. See that that 20-minute thing worked, didn't it? It looked like we were moving up a couple of minutes ago. Now we're under the 50. Now we're under the 200. Look at that. We test it. That's going low. Where could it go from here? Well, it's only a minute chart. You might have got in short that there and got a few pips on that. Move down there, 101, 101, 18 at the moment. Anyway, that's the euro on the 1 minute. Another question about gold. I can sell gold. Oh, it's not a question. He said sell gold now. Okay, well, that's your call, my friend. Do I agree? Well, it's been on an hour basis. Certainly, a profit would have been taken here. Certainly, as that again, as if I was trading this, for instance, that would have been a strong support here this morning because it's our daily. I'll show you what I mean. So this is our daily support line. So we're testing it, and you buy it when it gets here. That's what that end of day strategy would have been saying. But really, on an end of day basis, that's gone long here on the 28th of July as it's broken into the upper half of the Bollinger Band, having had a big down leg, lots of consolidation here in June, lots of sideways action. We got weak in July. We went all the way down under 1700, under 1750, sorry, under 1800, under 1750, and all the way down to 1680, a key level from a long time ago. But we've turned around and we moved up. So that would have gone long here. We got resistance at 1790, which is the 50-day moving average. We've got the 200-day moving average all the way up there at 1842. But we're in the upper half of the Bollinger. So that's long. It's been biased long for 4 or 5 days. So I would have been looking to go long on that, and I would have been looking to take long positions on an intraday basis, feeding off this trend line. So that would have been a bit of a worry, perhaps yesterday, but as we've broken over it, that would have been interesting yesterday into close. Probably wouldn't have taken that, but that's the key trigger. And then that's the key. That's a big, nice, positive candle here at 4 o'clock this morning. I wouldn't have been awake watching this, but that would have been a trigger because it's gone over the 50-hour moving average. This is the 1 hour time frame now. And then this morning, that would have been another key time here. 10 o'clock this morning, as we've gone over yesterday's high. See that candle there? We rallied into yesterday's high. We rallied into it for a couple of hours, tried to speak through it early on, came back down. Look, that looked quite negative at the close of that candle at 9 o'clock, but then the next candle engulfed that action. See how that one's, how that one is saying that hour has taken all of that price action into account and the previous hour from the body of the candles. So that's a positive candle here. And then you could, even if you'd waited here till 11 o'clock on the close of that one being above the close of yesterday's high. So that's positive. We've then rallied quite nicely. Couldn't get to the 1790 level. We talked about it before. That's at 1790 level. And then the 1790 level, sorry. We've gone to that 1888 level here on gold. There's that 1790, which is that 50-day moving average. So, and then we've had some profit taking and then some profit taking. Whether we move back down, who knows? But that's up to you. I can sell gold now. I don't know where you've got in. If you've got in here this candle, that's great for you. But again, it's all about time frames. In the Bank of England economy actual forecast 1.7, why does it negatively affect the pair? Yes, Umoko, you're absolutely right. It is Bank of England Day, and why does it negatively affect the pair? Because, you should say, well, interest rates have gone up, so the sterling should go up. Well, remember, markets move on anticipation. This 50 basis point hike was expected, and that's why sterling has been rising here against the dollar. This is the daily time frame for cable This is the daily time frame for cable, pound against the US dollar. So we've been rallying. Interestingly, a high, not unsurprisingly, was here on Monday, and Tuesday we turned down. The announcement was today. It was expected to be 50 basis points. It was indeed 50 basis points. But sterling has weakened on the outlook. Sorry, you can't see me, can you? Sterling has weakened on the outlook. Actually, I don't know how I'm going to do this. I just... Actually, let me put your please respond. There we are. Comment on Bank of England. We'll go. Sterling has weakened on the outlook that the statement said. Yes, interest rates went up, the most in 27 years. Why has the bank done that? Because it's expecting inflation to go even higher. It's expecting things to get even more difficult for the British public. The chairman or the governor of the Bank of England, Andrew Bailey, quite rightly talked about the effects of the pandemic, lots of stimulus from the government, lots of money being printed by the Bank of England. Then we've had the energy crisis sparked by Russia's invasion of Ukraine. Energy prices 7 times higher than they were this time last year. Huge move. Everybody's suffering from that globally. Obviously, we've got a grain crisis, we've got a food crisis. And on top of that, nobody seems to talk about this in the UK anymore, is the impact of Brexit, the impact of moving away from a market of 500 million people on your doorstep to do very simple trade with. And it's been much more complicated. And there are no benefits of Brexit. Very hard Brexit deal was negotiated by the extremes of the Tory party. And that is another consequence as well, which doesn't seem to get, nobody seems to talk about it anymore. Even the opposition in the UK are saying they won't reverse Brexit. But anyway, that's not to be taken lightly, and that's a significant issue as well. So sterling was down on Tuesday, it's down on Wednesday, and it's down today at 121, and it could significantly deteriorate from here as well. 120 is a key. If we go to the weekly time frame, it's got this higher time frame. Makoro, I'm sure you're not trading at these weekly time frames, but look, this is the weekly time frame for cable, for sterling. It is very weak. There's the 200-week moving average at 130.50. The 50-week moving average is at 130.78. It's about to cross. Sorry, that's the 200-hour. It's about to cross the 50 in the next couple of weeks. That is negative. That's a negative death cross pattern on the weekly chart. Okay, the weekly 220 period moving average, the weekly middle of the Bollinger Band sits all the way up there at 24.50. So sterling is, it's had a weak 2022. Is the floor in? Well, we've had 2 good up weeks on an aggressive on an aggressive Bank of England, a potential weakening Fed cycle coming down from the 75 basis point from the Fed from September and October. But the Fed might turn aggressive again as well. So we could easily see a stronger dollar again. So sterling remains weak in the higher time frames. 120 is key. We're currently at 121. So 120 is fundamental. If we go back years, where's that 129? Yeah, 120 is absolutely key, as you can see on this weekly chart where we went to. If I zoom in, you can see it's a key level, and it was back in 2020, the height of the panic of the pandemic when dollar was very strong. Sterling went all the way down, and that's now it's been a level to watch, 114.20. Is this current rise, this two-generation rise in inflation, going to be a significant pressure for sterling as the pandemic was? Well, I would argue it is. The outlook isn't great for sterling and sterling crosses, I would argue. But let's see what happens. Trader, what you see, not what you think, as I say. So here, as an end of week trader, I'm still short sterling. Certainly, I might have closed some of my short positions out from this big move down here and then this big move down here in the last couple of weeks. But it's a down week thus far. Remember, it's the most significant thing that can happen to a currency, guys, is an announcement from the central bank. We've just had a very hawkish, dovish. It's just unbelievable. Announcement from the Bank of England. Very, very poor outlook for the UK economy, which is already suffering quite badly. But again, markets always overreact. They go too low, they go too high. But the outlook from the central bank is quite key. And then we've got a new Prime Minister coming in. Miss Liz Truss is talking about cutting taxes to get votes, basically. She'll say whatever she needs to say. She's swinging all over the place. She had to turn tail on a comment she had said yesterday about regional pay boards. And so it depends actually what happens when she's actually in power, obviously. So whether those tax cuts will actually happen or not, we shall see. But that's going to have a massive impact on UK borrowing. It'll have an impact on the gilts. So therefore, borrowing costs will become higher, which is the last thing she needs if she's trying to cut taxes. Because the government will be getting less money. So, it's not good. So 121, where we sit at the moment, 120 is absolutely key. That's my outlook on Kuro, my friend. Sterling under pressure. And I know other people don't say it, but no, the Brexit situation isn't great either. So there may be some bargains kicking around in UK treasuries or UK gilts, but certainly sterling, I would argue, is pressure to the downside. Technically, in the short term, we are above the 20-day moving average, so you would argue that's positive. But 120.20 is our next support here on the daily chart, which is where the 20-day moving average sits in the middle of the Bollinger Band. So 120, 120.20, that 20-pip range is a big support area for cable, and maybe not too long before we start testing it. So you can see here, MACD is obviously lagging, but it's relatively positive. Stochastic here, again, it's fast-moving stochastic, but it's already rolled over this week, this August, so it could be a bit of a sticky summer for sterling. But again, we'll see. But the bias is to the downside still. Sorry, I was trying to show you that. So the bias, as you can see, is the downside. Is the floor in for the year here? That's the next test there, 117.60. The end of day was around about 118 for July for sterling. But ran to the 50-day moving average and has rejected it. There we go. There's that area. So I hope that makes sense, Lunko, with regard to the Bank of England. So the Bank of England did what was forecast. They've increased interest rates by 50 basis points, but sterling's fallen. That's what happens sometimes in the market, because the market was expecting it. It was within expectations. There was only one dissenter on the Bank of England MPC, and even that wasn't really expected. So you would argue sterling might have done better. But the immediate reaction was a positive spike to 122. as the news broke out, there was a dissenter, but this is the 15-minute chart. But we then fell to test 120 immediately. So a whole point move, a whole big number move on that announcement. Went as low as 120.64 as Andrew Bailey was carrying out his press conferences. Now recovered 121. We trade at 121.08. But bias is certainly to the downside for cable. Moncourt. So I hope I've answered your question, my friend. I hope you're still here to hear that. So, what do we expect in dollar yen terms? Asks Michael. Well, dollar yen. Remember what's going on geopolitically as well. Let's go back what I said earlier. So we had a massive rally in dollar yen this year. I don't know if you're interested in the long-term outfit, but we know we were bid. We got this big divergence in central bank policy. We got the Fed raising rates. We got the Bank of Japan saying we're not raising interest rates, supported by the government. But the yen was weakening. Great for exporters. Remember, Japan's a massive exporter, so it makes their exports more attractive. But it means buying energy, which is Japan's a big importer of energy. Remember, they had that huge hurricane that wiped out their nuclear power business industries. Lots of hydroelectric power in Japan as well, but still a big importer of oil and gas, and that's had a massive impact on the costs of inflation there. So even inflation in Japan is moving up to 2%, but it wasn't going to go on forever, and indeed it hasn't. So we turned around very aggressively from 139. We went to 133, which is our first target, 131, and then through didn't get as low as 130. We went as low as 130.25, but only two big targets were taken out as we went under the 50-day moving average and the 200-day and the 20-day moving average here at 136 and at 134 respectively. Then moved lower. Now we've bounced a wee bit. So going forward, yen needs to. It's still negative here, dollar yen. On an end of day basis, but to move back up, we need to break 134.65, which is the 50-day moving average, and then the midline of the Bollinger Band, from a Bollinger Band trader's point of view, needs to get back over 136. So some big targets, some quite high targets there for yen to move higher. I don't know what time frame you're looking at that, Michael, but that's the resistance on a daily basis, 134.70, the 50-day, and 136.20, the 20-day. Intraday, it's had a good rally up today. We've rallied to the 200-hour moving average at the top of the Bollinger Band earlier, and now we've turned around and come back down. We've got resistance at 134.36, which is the top of the Bollinger Band and the 200-hour moving average, and we've got support coalescing around the bottom of the Bollinger Band and the 50-hour moving average, which is that range there, 133.50 to 133.40, so 10 pip support thus far. But we have punctured that and traded lower in the last hour to 133.15. So again, dollar yen today is biased to the downside thus far. Massive sell on pound pairs, absolutely. What are you? FXC trade pad, very good, nice handle. Whatever the bank decides, what you're saying here, whatever the bank decides today, it's decided, my friend. We will still be looking for sterling dollar to head down to the 115 region in coming months. Steve Barrett, head of G5 Standard Bank. Well, there we go. Standard Bank in South Africa looking for sterling dollar to get to the 115. As I said, I'd agree with Steve there. I'm not allowed to give you advice like that, but 120, as I say, just to add to Steve's comments from the Standard Bank there, 120 is big psychological level for historical reasons for the sterling. As you can see, is the weekly FXC trade pad. There's that 120 level, which we've been tested even this week. So this last couple of weeks. So we've rallied, couldn't get over 123. We did sort of spike to 120 within to the 123 zone. 122.60 was a key level in the daily time. Let me show you that. So 120 2260 sits through here. This cluster here, which was sort of resistance, didn't want to go higher than that at the end of June. We didn't get anywhere near. We got to it towards the end of July here, and then we've rallied from it. So that resistance there, 122.60, 122.70, has held, and now we've got the 50-day moving average as well there. So that, we're into our third day down now for sterling. Next target is 121. Hang on, what's that one? No, sorry, 120.30, that 20-day moving average. So certainly I'd concur with that move. Michael's asking about dollar yen on the 4 hour. Okay, Andrew, Michael, let's go back to the 4 hour for dollar yen. So that's the hour chart. Resistance, the 200 hour there. Nice tweezer top formation, 4 hours up, short, more short there. It's gone under the Bollinger Band. Here, down into the 50 hour, and it's bounced off it. So that's the 1 hour. 4 hour, what does the 4 hour tell us? Well, again, a nice rally from this floor here at 130.67 earlier in August, earlier this week. Rallied up quite nicely, retraced, rallied up, spiked to the top of the Bollinger Band, but we couldn't break the 50 period moving average. That's sloping down. Tested it again today and bounced from it. So going forward from here, Michael, for the 4 hour, that's your first resistance, 134.30. Next resistance is the top of the Bollinger Band at 135, and then the 200 period sits there at 136. So 136, 135, but immediate resistance today is 134.30, the 50 period. Support is down there at the middle of the Bollinger Bands at 132.60. So for me, that's ran and tested it. It's not biased to the downside. That's biased lower. Signal line's rising though, and we are in the upper half. So again, I don't know how you're trading this on the 4 hour time frame, but it's had a good run, and it's ran and found resistance. So it needs to break that to move higher, and that's your support. So it's not really doing much as far as a trend following pattern is concerned. It's sort of consolidating now, so it needs to break above that level, that blue line, 134.30. Support is the 20 period, the midline, the Bollinger Band, 132.70. Resistance, first target market 135, and then second target market 136 to recover the downslide we had at the end of July. But remember, it's a very strong trending down movement, my friend. Okay. Abu Rafi, good evening, Rabu. Hope you're well. Thanks, Ban coming last. I got what you're saying. Okay, yeah, no problem. Yeah, it's a bit miserable if you're in the UK at the moment. Inflation running at 13%. I know it's much higher in many emerging market countries, and obviously some countries are suffering from a food crisis as well. At least the Brits haven't got that, but it's a very gloomy summer and potential summer of or autumn of unrest as workers demand higher wages, as inflation is ramping higher, and the government saying they can't afford it because it's only going to stoke inflation, but inflation is already high, and workers are suffering. So yeah, it's a big political mess, especially for Miss Truss if she's trying to stick to these promises. But see if she actually gets the nominations. 5th of September will be announced. Voting papers still haven't gone out. They were supposed to go out on Monday, but there's some issues with worries of being infiltrated, and so they can't even organise a 2-horse race, the Tory party. But anyway, there we go. So yeah, Sterling's not it's got not many friends at the moment. So let's finish with sterling because they've been the event of the day. Hello, what happened there? Continues to be pressured as I speak. We're into our third day down. The hourly chart has breached 121. We've bounced off that a wee bit at the moment. We're trading at 120.93. No, we're not. We're back under 121 to the downside. So this is what the market thought of the Bank of England's announcement. Huge candle. big whole number move from 122 all the way under 121. Big move on that announcement. So will we get a similar sort of move tomorrow for non-farm payrolls? To remember tomorrow as well, guys, we've got the Canadian jobs numbers as well. So it's the same time as the data's come out today. Andrew will be with you tomorrow for non-farm payroll. The headline figure is expected around 250 to 260,000. Unemployment expected to tick up, back up to 5% tomorrow. Sorry, that's the Canadian number. Back up to 3.6%, possibly 3.7% for the unemployment rate. See what the earnings numbers like, 0.3 or 1% for the monthly number tomorrow. And say bounce back for Canadian jobs tomorrow, potentially, or hopefully after that big surprise last month. Remember last month in the US, then non-farm payroll, very strong across the board, exceeded expectations significantly. 375,000 or 372,000, I think it was, 372,000 for the headline figure, much higher than expected. Earnings were stronger. Participation rate was also up, so it was a very strong number last month. Remember that adds to the idea that we're not going to get stagflation in the US because jobs are holding up. The UK Bank of England is still trying to talk that up. But the breadth and the depth of inflation, where it's seeped to within the economy, where prices are rising, is quite significant. So call it a recession, call it a technical recession. We've had 2 consecutive quarters of decline in growth for GDP. It was minus 1.6% for the first quarter, and it was initial reading was minus 0.9 of 1% for the second quarter. That is a recession anybody speak, and I think it's going to run and be deeper and more aggressive than many people think. We haven't had inflation at this level for 30, 40 years. It's 2 generations of workers and investors and business owners haven't experienced costs rising like this. It's not going to go on forever. The war in Ukraine isn't going to go on forever, but there's no end to it at the moment, and it's just grinding on. Unfortunately, tragic consequences for both sides, people dying on both sides, obviously. But economically, it's had a massive impact on energy, particularly for the Europeans and particularly for Germany, the engine house of the EU. So, parity could be in sight again for euro dollar quite easily. Perhaps not immediately, but certainly the dollar bid may come back. But anyway, sterling day, sterling under pressure across the board. Cable trades at 121. I've got the others on here. Pound yen was all the way down, wasn't it? We had it before. I can't see the sterling costs here, but never mind. Okay, so take care, everyone. There's no more questions. I'll call it a day. It doesn't look like there's any more questions. I always say I'm going to wrap up and then questions come running in, but I'm going to call it a day. Take care. Join Andrew tomorrow for non-farm payroll. Same time, same place, and trade carefully, and may the pips be with you, my friends. All the best. Bye-bye.